Hello, everybody. How are you guys doing? Happy new month. Happy Sunday. I hope you guys had a wonderful weekend. Welcome to the Game Plan YouTube live stream. If you're joining us for the first time, put one in the chat and let me see where you're tuning in from today. Get started just shortly here. Hey, Benjamin, where are you tuning in from? So put in the chat where you're tuning in from today. Which city are you tuning in from? And which country? We shall get started right away. I'm just trying to get a few things ready here, and then we'll get started with the game plan. Exciting times. Edmonton, awesome. Abanda says from USA, New Jersey. Okay. Say hi to Donald Trump for me. Welcome to the live stream. All right. So let me know where you're tuning in from today, which city, which country you are tuning in from today, and we shall get started right away. And if you made money last week, put money in the sign. Put the money sign in the chat and let me know if you made money last week trading. All right, so we shall get started right away. So last week was a very very interesting week in the sense that we had lots of catalysts, right? So we had the mega cap earnings, we had earnings from Meta, we had earnings from Amazon, we had earnings from Google, we had earnings from like all the major mega tech stocks, right? We also had earnings from Apple as well. And some of the earnings were good, some were not good. And it caused some of the mega tech stocks to sell off. Also, we got President Trump went to China to finally meet with President Xi. He didn't go to China, he went to Asia and met President Xi in South Korea. So in this meeting, there were talks to talks to reset like the whole trade deal stuff. There's no agreement yet, but they agreed to extend the trade agreements in terms of negotiation to 1 year. So basically, they are kicking the can down the hill, kind of thing, right? So there wasn't any kind of done deal kind of thing. It was just only a thing of speaking to President Xi to make sure that they calm down tensions and they allow the trade negotiations to go on until 1 year from now. Okay, so it was more or less like a market friendly tone, a signal cooperation on trade, AI, and geopolitical risk, reducing near term uncertainty for equity and global markets. Right. There's also talk about technology and chips headlines, right? So basically, they went around and talked about easing out like things to do with all these rare earth materials. They were going to open it up so that they can start exporting to other parts of the world and the US, and the US really needs that. And then there was commitments to purchasing soybean from the US as well. China promised that. And yeah, so I think that it was a cordial kind of meeting, no tensions, and everything was fine. But the trade deal has not been signed yet, so it's still up in there. So we shall see how that plays out in the weeks and months ahead. Also, there was the FOMC meeting. That was Fed Chair Powell had the Fed cut interest rate in the US by 25 basis points, and they mentioned that they were not sure about the December rate cuts, and that caused the market to sell on that Wednesday. So it caused the market to sell because the market was pricing in rate cuts in December and rate cuts in January. And the Fed said, well, the rate cut in September is on pause for now. They need to get more data to figure out whether they are going to cut interest rates or not. Because what happened was that the Fed, because of the lockdown, they don't really have any employment data. And one of the reasons why they're cutting interest rates is because of the labor market softening in the US. Inflation is something that they haven't reached their 2% target, but inflation is on the downward trajectory, right? So it's going down, and they're still working on it. But the main issue there was the labor market. So it sounded to me that based on Powell's press conference, it sounded to me that the Fed do not have the information, like any kind of job numbers. They weren't getting any job numbers, and they were going to wait to see how the government shutdown thing works out. And once the government reopens, they can get that data and then use that as a benchmark for cutting interest rate. Also, in the press conference, Fed Chair Powell was asked about the labor market, and he was saying, "Well, the labor market looks like it's showing signs of it's still resilient." And I mean, he didn't really want to say anything about the labor market being weak or anything of that sort, but he mentioned that they are watching the labor market closely. So that is one of the reasons why they are cutting interest rate. So we shall see how things work out once the government shutdown situation is resolved and the economic data comes in. Because right now, the market is trading blindly. You see the rally that we've had so far, I call it an artificial rally. It's not a real rally, because a real rally would have included things like GDP numbers, unemployment numbers. We need to get all those things for the rally to be legit. Right now, it's just a rally based on AI news. OpenAI plans to invest 100 billion into AMD. Where is the money? Money is not there. It causes AMD stock to rise, and they take a stake, and that's the deal. So we are seeing a lot of quote unquote, for lack of a better word, shady deals being done in the AI field, where you don't see the money moving around. It's basically talks of agreement into investing. So initially was NVIDIA plans to invest 100 billion into OpenAI. And then OpenAI turned around, says, okay, we want to invest 100 billion into AMD to get AMD chips. I don't think the money was transferred to AMD. No, the money was not transferred. So because of that, they say, hey, by the way, AMD, that's going to help you guys increase your stock price. So once your stock price goes up, then what's going to happen is that will make up for that 100 billion. So we're seeing all that kind of deals going around, especially with OpenAI. And there's news that OpenAI wants to go public and have an IPO where they are going to be valuated at $1 trillion. So this is a company that is not making money, not making good revenue, and they want to come to the market and list for $1 trillion. I mean, we know that they're doing ChatGPT and stuff. It has a lot of impact and things like that. But what is happening is that there's a lot of money flowing around in disguise of agreements and kind of deals. So those deals, at some point, we shall see if those things are going to produce the results that is required. So I believe that 2026 is the year for a lot of tech stocks to set up, because in 2026, most of the tech stocks have to justify their high valuations. And I don't know if those companies are going to meet those valuations yet. So we are trading at extremely high valuations right now. And this is not the time, if you're an investor, if you're a long-term investor, this is not the time to be buying things at all-time highs. Nope, don't do that, right? This is the time to have some cash on the sideline, and also make sure that if you are a trader, you just trade in between short-term and make money. The time to buy long-term has passed. That time was in April. That time was in the bear market of 2022. That was the time to buy long-term and stuff, right? Especially this year would have been in April. Right now, you should not be buying things like PLTR at all-time high. It makes no sense, right? It's not time to be buying all those stocks that are trading at all-time high. That's not a right time to buy. In 2021, I remember very well that there were talks about high valuations. I kept on hearing that theme in a lot of social media, a lot of places in the news and stuff. And right now, a lot of stocks are trading at very, very high valuations right now. And I don't know if that's sustainable. So we are going to see in 2026. So what you have to ask yourself is that the $1 million question is that if any of the stocks that you're holding now, if it crashes by 50%, it gets a 50% haircut, can you hold it? Are you going to be comfortable holding it for if it's 4 to 5 years? 4 to 5 years might not work. Your time horizon in terms of if it's going to be 20 years, 30 years, then that's fine. It might recover. But there are stocks that are trading at high valuations now. Once we get into the recession next year and the market crashes, those stocks are not going to get back there again. I've seen that movie before. I've seen it in 2021, and it's not going to change. I know there's talk out there saying this time is different. This time is different. Sorry, this time is not different, right? It's the same. The same cycles go round in circles. Okay. All right. So this week, what are we looking at? This week we have earnings coming up for I would say the rising stars of the market, right? So we had the mega cap earnings, like the main guys, like the Metas of this world, the Microsoft, the Amazons, like those are the main guys, right? The Magnificent Seven. Now we are going to have earnings of those who are going to be the Magnificent Sevens of the future. Example, you have earnings of like AMD coming up. You have earnings of Shopify. You have earnings of a whole host of stocks that could be giant companies in the future, right? So in terms of the earnings, what do we have? So the earnings that we have this week is going to be, we have Palantir is going to be the one we are going to be watching on Monday. Palantir always reports on Monday after the mega cap tech stocks have reported. So we are going to watch this. Is Palantir able to continue its high valuations to go up? Palantir is already at or close to all-time highs. We shall see if it can continue, right? And we are going to see Hims and Hers is a healthcare company. So the ones that I'm anticipating I'm going to be watching closely is Palantir on Monday and then Hims and Hers on Monday, right? Hims and Hers is currently trading at the 200 simple moving average. We are going to go through that once we go to the technical analysis session. Then Tuesday morning, we are going to have Uber, Shopify, Canadian company, Shopify. So Shopify is a solid company. I believe that they are going to produce some good earnings and is going to push things up. AMD has rallied a lot. I do not think AMD would get a big rally post earnings. No, it might just be a small pop and consolidation, or even a sell, because it's been rallying very high, like at very high rates, and it needs to cool down. So I believe that we are going to see, don't be surprised that after Tuesday, once the earnings comes out, even though the earnings numbers might be good, you might not see a big move because the move has already happened, right? So it's going to be like buy the rumor, sell the news. But if AMD comes and they are not able to justify their high valuation, you are going to see a sharp sell-off. So right now, these companies have to justify why they are so expensive. They have to justify that. And on Wall Street, if you post earnings and you fail to justify that high price tag, you are going to get a haircut, right? It's going to involve a huge sell-off. Okay, so Uber, Shopify, AMD are the ones I'm going to be watching in this on Tuesday. I mean, the other ones like Upstart and things, but these are the ones I'm going to watch. Also, we are going to watch Beyond Meat. Beyond Meat was did a short squeeze like a couple of 2 weeks ago. We shall see if it can continue squeezing up again. But the main ones I'm going to be watching is Uber, AMD, and Shopify. Then we go to Wednesday, Robinhood. So Robinhood has done well. It's been a remarkable company. They've done really well in terms of the new things that they've done. The company has grown a lot. I remember it's a company where we should trade at $30 or something a couple of years ago, and now it's trading at hundreds of dollars, right? So I believe that Robinhood might get a pop after hours, or it might just because it on the technical standpoint or technical charts is showing that it is at the key resistance. We shall see if it can break above that parallel channel and go up. We shall see what happens on Wednesday after the close. So over here, I'm going to be looking at Robinhood, IonQ, quantum computing company. We shall see if there's any news or anything catalyst. Like these ones are small companies, IonQ. So they need that kind of good sound bites to send the stock up. Like, okay, we are getting lots of requests, we are getting lots of business coming in, and our guidance is going to be strong. We think we are going to make more money in the next quarter, something of that sort, right? I mean, the market is not going to judge it based on their past performance. They are going to look at what is going to be your forward guidance. Are you projecting to be, say, maybe profitable next quarter or 1 year from now? What are you? Do you have more business, more like deals being signed, those kinds of things? That's what the market is going to look to hear from these companies, because these companies are the companies of the future, companies that are primed to make money in the future, not right now, right? So they are going to look at that on Wednesday. And then ARM is a semiconductor company. On the technical chart is set up to break out, so we shall see if it can follow through with that. And then Snapchat has been beaten down a lot. Maybe they'll say something nice and it's going to get a pop. Don't be surprised to see Snapchat go up by, let's say, 20% on the day, because the stock has already been beaten down. The expectation is very low. So any good stuff, any good news story, boom, is going to send it up. Okay. And Thursday, we are going to have D-Wave and Trade Desk and Open Door. So Open Door is a company that's it's also was had a short squeeze a couple of months ago, and the chart is setting up for a big breakout. I'll show it to you guys shortly here. And Oscar. So Oscar is a healthcare insurance company, and then they have a lot of Affordable Care Act like insurance they sell those kind of insurance to their clients, and this government shutdown is affecting them. So if the government shutdown stalls out or they find a solution to it, and they announced that they were going to extend the ACA, like Obamacare subsidies, then you are going to see this benefit Oscar. So at some point, that's going to be done. The lockdown, the shutdown. Sorry, the shutdown cannot continue because folks have been home for almost a month. Some people are working and not getting paid. Some people too are like haven't gotten paid throughout the time, although they're going to get back pay later, but it's tough, right? So at some point, the lockdown, the shutdown have to stop. And I hope that cooler heads prevail and they are going to find a solution to that as soon as possible, because we are getting to the Christmas season, festive season, and during that time, those guys that are working at the airport, they're also government workers. And some of them are working now without pay. So there are certain things that is a national security issue. If you don't have enough staff working and there's some kind of, God forbid, there's a terrorist attack or something, what's going to happen, right? So you need that to be sorted out, right? You need that to be sorted out. So I hope, the Republicans, President Trump, and the Democrats can come together and resolve the government shutdown issue so that the government can open and so that people can get their back pay and live their life and continue doing their job. Okay. All right. So Friday we are going to get there's some energy companies, Constellation. There's also all these companies here like Wendy's and stuff. So the main ones that I'm looking up to are the ones that I've mentioned already. So Wednesday, Robinhood. Thursday, I'm going to look to see if we get that breakout in open, which is primed to break out. And we also have DDOG. DDOG have to do with AI, cloud computing stuff, software. So we'll see how that plays out. And then we have healthcare, Moderna as well. All right. So there's one thing that I was doing my analysis this weekend and I stumbled upon something and I wanted to bring that to you guys' attention. So I've been studying the US dollar index and its cycles with the stock market over the last 100 years. And I realized that, it's going to show you that anytime the US dollar is strong, it causes the stock market to be weak and we get a sell-off. So basically, it has an inverse correlation with the stock market, right? So anytime the dollar peaks, stocks bottom. Anytime they reach their top or their troughs, the stock market gets like, we get this kind of stock market blow off tops. Okay, so we shall see how this has played out over the years. So I'll show you a chart here. I'll go to my my chart here in a sec. So this is the US dollar chart. This is the index, US dollar index, right? DXY. So those that trade Forex, you guys will know this. Here is, so if you look at this, so this are like a naked chart. I don't have any indicators on it. So I have here, so this 2011. So if you connect the 2011 lows to 2021 lows, right? And 2025, this is what you get. So this, I call this mother of all trend lines, right? This is from 2011 to 2025, right? So this be many years in the making. And what do we see here? We are seeing this bottom up. Okay, so 2021, when the dollar bottomed, at that time, that was June, the stock market was still rising. And then when the dollar peaked here in what? The bear market of 2022, towards the end, the latter stages, right? And then just right before 2023, when there was an announcement that, okay, they were going to start, stop increasing interest rate and stuff like that, and it caused the market to start rallying, right? So we saw the US dollar rally. And then what are we seeing now? This is a monthly time frame. This monthly time frame, so it takes a long time to develop, right? Monthly time frame is over 2011 to 2025, right? So right now we see the US dollar bottoming. and it's ready to break out. So anybody that has done technical analysis or done our course, you know that this is a trend line, right? So you have what I call, this can be defined as a triple bottom. One touch, two touch, three touch, right? 3 times. And if you look at this, in this month, it did what? A doji sign. Doji sign means that it's a sign of reversal in technical analysis, meaning that it's ready for a bullish move to the upside. So if the US dollar starts rallying and squeezing to the upside, what's going to happen is that stocks have to go down, because that means that the cost of business is going to go up, because now if you are importing things, it's going to be expensive because they use US dollar, right? It's going to be expensive. Now it's cheaper. So we're seeing the stock market go up. So I just want to send this up. So this is a warning sign. It's a warning sign that 2026 is not going to be rosy. 2026 is going to be a tough year for the stock market, and I don't believe that the stocks that we see today are going to continue rallying and going. No, and the economy is showing weakness. So you have a rising dollar about to rise. You have a deteriorating labor market, whereby the job numbers are low. In the US, 22 states are already in a recession, like especially the small states, not the big ones, not like California, New York and stuff, where they are doing all the AI stuff. 90% of capital expenditure has been in AI. So if you take that out, the US economy would have been in a recession by now. And we are living in what I call the everything bubble. We have real estate at all-time highs. We have stock market at all-time highs. We have crypto at all-time highs. We have what's it called? Crypto at all-time highs. Everything is at all-time highs, and it's still going. So I think at some point that bubble is going to burst, and when it bursts, I think we are going to get something which can be even worse than 2008, right? It's not, I'm not trying to scare anybody, but I'm just sounding the alarm bell so that people don't go and over leverage and go and be buying stocks at all-time high because someone on YouTube said you should buy them because it's dollar cost average, because you are going to hold it for 5 years. That will not work, right? But if you go into a multi-year bear market, some of these stocks are going to take a long time to recover. Some of them will not even recover, right? I've seen it. I've seen it before. In 2021, I was there. I was trading. And I saw it happen. We saw stocks like Zoom go to $500. We saw stocks like Peloton go to hundreds of dollars. And then where are they now? All those stocks crashed. So if you have all those stocks in your portfolio and you did not sell them in the name of I'm holding a stock for 50 years, it's not coming back. Those stocks are not coming back. So right now, what you need to do is that you need to go into your portfolio to analyze which companies are producing profits. The profit-making company, the companies that are profitable, those ones are the ones that if we even go into a nasty bear market, they are going to recover and come back up. But those that are loss-making companies, those ones might not survive the bear market. If I say might not survive, what it means is that they are going to recover, but they are not going to be trading at the peaks that they are trading right now. So there are certain stocks that I just trade them. I don't buy them in my long-term portfolio. No, I don't buy those stocks in my long-term portfolio. So this is just another warning sign, right? That what's about to happen, what's about to come. And I mean, the once the bubble bursts, it could be the worst recession, as bad as the 1930s. It could be as bad as that. I mean, I hope not, but it could be. I hope it's something mild, but it could be as bad as that, right? So it's always, as I say, you prepare for the worst, right? And position yourself. So once the bubble bursts, what's going to happen is that real estate prices are going to crash. stock market will crash, crypto will crash. We even have gold and silver and things at all-time highs. So that's where you're going to be seeing that you're going to see prices of gold and stuff soar, because people are going to run to gold, precious metals. Even gold will also struggle a bit, but eventually gold will come up strong, because we are seeing that in this market. Anytime that there's volatility in the market, what do you see? Gold goes up. So I just want people to know that we are in the final stages of the rally. You go other places, you are going to hear that the bull market is just starting. I laugh about that. Bull market is not starting now. We are in the final stages of the multi-year, 40-year bull market cycle, right? We are in the final stages. And I believe that month of November, I believe we are going to get another strong month, because seasonally, month of November is usually seasonally strong. But this year, seasonality has not really worked that well. So maybe we can get a surprise in November. Who knows, right? But November and December are usually very strong months, because, like, once we get into December, what happens is that the hedge fund guys, those that have a lot of cash on the sideline, who did not invest or who did not deploy those cash, they are going to get into a FOMO mode, fear of missing out, and then they are going to be buying things to please their investors, right? Please their investors, and that's going to cause the market to rally, and we are going to float up and end the year on the high notes. But the problems and things, signs of weakness are going to be, we are going to be seeing that in 2026 sometime, right? So yeah, so this is what I see here. And if you look at this pattern, we see that anytime we get here, we got a breakout. Here we got a breakout as well. So now we are pushing here. I believe that in the next couple of months, we are going to get a rally in the US dollar, right? Once the US dollar starts rallying, we are going to see a decline in the stock market. And in 2021, the bull market came to an end in November, December. So this bull market could come to an end in this November or December. I don't know, who knows, right? But we are at the top. Okay, we are getting close to the top. This is not the end yet. We still have some more time to go. We are going to close the year on a high note, but this is not the time to go crazy, to be buying things trading at all-time high in your long-term portfolio. Don't do that. All right. So here, what we see here is that, so over the last 100 years, this is what has happened. Anytime the US dollar has gone up, what happened to the stock market? In 1929, right? When we had, that's the Great Depression, 1929, right? Then 1930s, they got the Great Depression and stuff. So we had the US dollar was strong, and it caused the crash, Great Depression. 1985, we got a peak that was a bit of an anomaly. We got a peak in the US dollar, Plaza Accord, and it caused the stocks to boom, right? 2000 dot-com bubble, we had a strong dollar, and then we had the dot-com top. We went to the top at the time, and then we know what happened. Dot-com bubble, the stock market crashed. 2009, we got the peak of the US dollar, and then the stock market had bottomed. 2022 was where the US dollar made its 20-year highs. And guess what? What happened? We were in a bear market in 2022. So the take-home message here is that the the alarm bells are ringing, and we just have to be very careful and very mindful of that. Okay. So what's the summary like in terms of cycle pattern? When the US dollar is rising, bear market risk, right? It doesn't mean you're a bear market, but it's going to be bear market risk. It's just like a warning shot. When US dollar is stopping, that's the time that the market is bottoming after a bear market or a sell-off, and then you have to now buy equities, right? Buy stocks. When the US dollar is weakening, that means that the bull market is accelerating. When the US market is bottoming, that means that you have to prepare for the market top. So this is where we are at here right now. US dollar is bottoming. and we have to prepare for the top. Okay, so this is just I'm showing you the technicals. The good thing about the technicals is that the technicals don't lie. This is not news. This is not CNBC news. The news control the narrative. Social media is hype, but technical analysis is, technical analysis is the data, right? It puts the probabilities in our favor by 80% if you know what you're doing, right? It puts the probability. It's not 100%. There's not 100% in life, but it tells us what is about to happen before it happens. Okay, yeah. So how do you play this? So what I'm going to do is that I'm going to be investing in there's this UUP, I believe. Yeah. So this is the US dollar index. This one, I'll be investing in this. So because we are seeing the bottom in here, so I'll invest in this and looking to take off like once it gets here, somewhere here, all-time high, so make new all-time high, because this is trading. If you look at this is trading. Those that have taken our course, this is what a deep value zone, right? So this is trading at a deep value zone right now, which is Black Friday sale, right? That's the time that you should be buying things for long-term hold. Okay, so this here, this place. So right now, once we break out of here, we would have left the deep value zone to a place where we start rising. So this has a lot of legs to go, a lot of time to go, because now it's going from the bottom to the top. Okay, so there's something that you can get for exposure into the US dollar. If you want to get exposure to the US dollar, you can get this ETF. Either you can buy the shares, or you can buy the option, leap options, whatnot, and hold it in your portfolio. That could serve as a hedge on your longs, right? So if you are holding a long-term portfolio and you're managing it, you always have to have some kind of a hedge in the portfolio, right? Especially once the market is getting to the top, because nobody knows where the top is going to come, but you're going to get the signs, and these are one of the signs of the top. Okay, all right. So now that we've gone through this, what's the execution strategy here? So execution strategy is that go long on stocks when US dollar peaks or rolls over. You go short or hedge your portfolio when US dollar starts rising fast, right? Once it starts rising. So we are going to very soon. So we are going to watch for Fed policy, liquidity flow. So now the Fed announced quantitative easing. When they cut interest rate, that means that you're putting liquidity into the system. So, but liquidity, as we've seen, if you study economics of the markets, you are going to know that liquidity did not save the market from crashing. It's not going to save it, right? So that's the thing. So we shall see how that plays out, but just a warning sign for you guys, especially everybody that tuned in today. You guys are going to know that, hey, we are getting to the top. We are not there yet, but we are very close to the top. Okay. All right. So now let's go to let's look at what the SPY is showing us, the SPY. That's the ETF that tracks the S&P 500. That's the ETF that tracks the S&P 500. So this is the weekly time frame. What I'm looking at is that for the SPY, my range for this month. So I already put this projected targets. So this purple line. So if the market were to sell off this month, right? This is where I think is going to come. This is the low of November if we get a sell, right? If we rise, if we rally, I think we are going to come to 702, which is around 7,000 and some change on the S&P 500. You just multiply by 10 and you get that number. So here, and then in December, if things, if the rally still continues, then we can come here and close the year somewhere here, right? It could overshoot as well, but these are the ranges that I'm going to be working with as a technical analysis trader, and I'm going to be watching that closely. So let's go to the lower time frame. Let's go to the SPY. So over here, we look at the SPY. The SPY is putting in what in technical analysis is called a bull flag. This is a classic bull flag. It sold off, but they couldn't break below the 9 EMA, and now it's held. So we shall see how that plays out. So tomorrow, Let me check the futures market again. The last time I checked, it was green. Last time I checked the futures market, it was green. So let's see what it's doing. So futures market is still green, and so the ES futures is trading at around 21 points up. So let's say this is the close here, 681. So this is around, if we were to open right now, it's going to be 683, 683, 61, something like that. If the market were to open right now, it's going to open somewhere here, somewhere around here. So it's going to be like a gap up kind of thing, somewhere around here. So it's still going to be inside that bull flag. It's still going to be inside the flag. So what I'm looking at for tomorrow is I'm looking for something like this. Let me see if I can draw it. Yeah, something like this. So here we break out of the bull flag with a green candle like this. So we break out of the bull flag with a green candle. It might not be as big as this, but just for illustration purposes. So if we break out of this, then we've broken out of the bull flag, and then it's going to come to this multi-year trend line. This is a 5-year trend line. This is from 2020, 2021 highs, this one. So if you extend it, it's 2021 highs this year. 2021 highs, so that's 4 years ago. 2021 highs was in November, December, so 4 years ago, and now we are coming here. So if we're able to break out of that trend line, then we are going to get a squeeze to the upside, right? We are going to get a squeeze. So that's what is going to cause the market to go higher, right? In what I've called a blow-off top. So I've been talking about a blow-off top since January, right? January this year. So I'm not just talking about blow-off top right now. I was talking about it in January when the market was nowhere. And even I was talking about it in April when the market was here. So far, this is what we've seen. So this is a monthly time frame. We have gotten 1, 2, 3, 4, 5, 6. I believe we are going to get number 7. Typically, number 7 in the stock market is a significant number. So once we get to 7 and above, especially 7, there's always a reaction. So that might be the end of the road for the year, or maybe the end of the road for the bull market. Who knows, right? But I think that we're still going to get, if we get a green month in November, then most likely we are going to get a green month in December, right? Because we typically have what is called Santa Claus rally into the end of the year, unless something catastrophic happens in the job market, unless something catastrophic happens, and that's going to stop it from happening. But otherwise, I believe we are going to get one more month to the upside. And if you look at this, if you look at the volume, right? This is a volume bar. So you can see that since April, May, June, July, August, right? You see the white line here. The white line here signifies average volume. So if you're trading above the white line, that means that you're trading above volume. That means that more people are coming into the market, more money is coming, more liquidity is coming. All throughout that rally here, we haven't gotten above volume. So now this is the first time where we are getting above volume. So I believe that if we could get something like this in the month of November, then if we get a big rally in the month of November and maybe we get a consolidation green rally in December, then we'll top up from there. So I believe that volume has started increasing, and we are going to see if that volume continues, that momentum continues. So that last month was the first time where we had a volume higher than all the previous months. All the previous months from Liberation Day was the red. Month of April, all these ones have been green, but they have all traded below average. And you can see that here in the month of September, we touched the average line and we held it just a little bit, just on the top. And now we've broken out of that. So now I'm going to look to see if we can get another higher volume. What volume is going to increase? Volume is going to increase, right? If we start getting decreasing volume, that means that maybe we have reached the top for now until further notice, right? But if this continues, I think we are going to continue. At least we can get to this peak somewhere here. Maybe this month's on is going to be somewhere here at the highs. Okay. All right. So what I'm going to look at in this month is I'm going to look at a bigger picture, right? Bigger picture idea. So my low for the month, I'm targeting 661. And if you go to the weekly time frame, you're going to see that the SPY, every time it sold off, it has always held the 9-week exponential moving average. So I'll be convinced about a sell-off or a decline in the market once we break the 9 EMA on the weekly time frame. If it doesn't break it, then it's going to be a buy dip moment, like what we've seen several weeks, like in several weeks, like here, and now we are going to see what's going to happen. If it comes down and it holds it, then it means that we are still going to go up. But if we see that we get a weekly candle closing below the 9 EMA, that means that the market will now be in trouble. It needs to confirm. If it confirms again to the downside, then we're going to go down, right? So that's my range for the month of November. I expect us to come to the top here at 702 or 700, and then the lowest is 661 here. Okay, so let's look at QQQ. That's the NASDAQ heavy index. So the QQQ has been doing its thing, and so far it's been staying strong because that's what controls the market. So I believe that for the highs of November high projection is going to be somewhere here, 654, and then the lowest is 603. So in between here. So are we going to go here first, or are we going to come here first? Whichever one, right? Wherever it goes, we are going to trade it, right? So here, if it comes down, then first of all, we are going to come here and fill this gap on the weekly, fill this gap here, and then we can see if we can head down again to retest this area. So you see this here, it has always come and closed and held the 9 EMA. This is the teal blue line or the CN colored line. It's always held it and then bounced from there. Okay. So that's my game plan for the month. So I'm looking forward, big picture idea for the month of November. And my highs, cycle highs has to be here, right? Because this a multi-year trend line. This is a mother of all trend line from 2018 highs, and then this is 2021 bull market highs, and that here. So once price comes here, I think it's going to get tired by December, and then we'll start getting the sell. So if we don't get the sell in the market or correction, we've not gotten that yet. Every time it comes down, it goes up, comes down, it goes up. If we don't get that in November and December, then we are going to start getting that in January. That's how it has to be, right? That's how, if you look at this in 2021, when the market topped off, it happened in November, right? And then December, it flattened out, and then boom, it sold off, right? So is history going to repeat itself again this time around? Who knows? I don't know, right? We shall see how that works out. But for me, as a technical analysis trader, I let the technicals guide me. So I'm not walking blindly. I let the technicals guide me. So if I know there's a mother of all trend lines here, I'm not going to be buying things when it gets here. No, it makes no sense, right? So that is what technical analysis does for us. It makes you aware of your surroundings, and it makes you know your bearings so that you don't make a big mistake going to buy a whole bunch of stuff when we get to this mother of all trend lines. So right now we can push, but it's just a small push to the upside. So month of November can turn up to be a choppy month. It can be choppy. If you don't get a big rally, it can chop around and consolidate, and then December it can squeeze from there. Or it's going to dip, come down, and then from there it's going to rally into Santa Claus rally into December. We shall see how that plays out. But these are my range. This is what I'm going to be working with. That's the range I'm going to be working with. I'll see which ones go first and which ones go next. Okay. Yeah. So that's QQQ. Okay. So now let's go to the individual stocks. and stuff that I'm watching here. So let's check out the Bitcoin. Let's check out Bitcoin. So Bitcoin has been struggling, right? Bitcoin has been struggling all throughout the last week. It was struggling, right? Bitcoin was struggling. Let me see here. Let me pull it up here. BTC, Bitcoin. So Bitcoin has been struggling, and I believe that this could be the week for crypto. This could be the week, right? This could be the week for crypto to come back, right? And it's going to be a comeback kit, right? Comeback kit. So is it going to be a comeback kit or is it going to be a problem child, right? We shall see how that works out. Comeback kit or problem child. I don't know. We shall see how that plays out. So for me, right now, I'm watching this channel closely. This is a weekly time frame. I'm watching this channel closely. I'm going to see if crypto is able to hold, right? So far, it's been struggling. Last week was a red week. Is it going to be another red week? Who knows? We shall see, right? And we have this trend line here holding this one. As long as it does not break below this trend line, then there's hope for it to bounce. If it breaks it, it's going to come here, and this is going to be the last stop for it to hold. If it fails to hold, then it's going to be in trouble. So here, Bitcoin will not make new all-time highs until it breaks this trend line. I've been talking about this for a long time. So all the guys who listening to on social media telling you Bitcoin is going to go to 200, 300,000 before the end of the year, 150,000. It's not going to happen until we break this mother of all trend lines. You see this trend line is from 2017. And anytime Bitcoin has gotten to this trend line, it has crashed. Look at this. 88% crash in 2017. 2021, the bull market, 80% crash. Here you see that it struggled to break it. It came here, it sold. Came here, it sold. So now Bitcoin will only make new all-time highs when it breaks this mother of all trend lines. And then once it breaks it, then we can get to 150,000. But until then, there isn't anything 150,000 or higher than that, right? Once it breaks, it's going to go up to somewhere here, maybe 143,000 or 150-ish, because it tends to overgo, and then it's going to blow up and go, right? But if it's not able to come here anymore, then that might be the end of the road, right? That might be the end of the road, unfortunately. Okay. All right. So that's what I'm going to be looking at for Bitcoin, and we shall see if it can hold. So far, let's look at the daily time frame here. Daily time frame is showing like it's still consolidating, right? So yeah, as long as it does not break below this trend line, there's hope for it to reverse. But I believe that very soon we are going to see Bitcoin wake up from its sleep and push up. For Ethereum has been respecting this trend line. This one is from April 2025. It's been respecting it. As long as we don't break below this flag, so this is your bull flag, as long as we don't break below it, I think Ethereum is going to reverse and push up at some point. We shall see how that plays out. Now, let's go and talk about gold. So what I see here for gold is that liquidity, if crypto is to rally, then that liquidity has to come from somewhere. It has to come from commodities like gold and silver. So commodities like gold and silver have corrected. They've done a 10% correction already. And look at what happened here. So this a parallel channel, and this parallel channel is from 2023. Gold respected it all throughout, and then what did it do? It broke out of it. It broke out of the parallel channel, and then this is the resistance of the parallel channel. What did it come to? Retrace to the scene of the crime. So right now, it's holding here to see if it can hold. If it holds, gold will go back up. I believe that gold will eventually go back up and even get to the magic number of 6,000, right? So it traded to, the peak was 4,400. I believe that once it confirms here and goes, it's going to go to 5,000. Okay, so that's why I'm watching for gold. So if gold starts selling off, then you are going to see Bitcoin rally. So far in the futures market, let me check again. Last time I checked, so far in the futures market, I'm seeing gold has moved from red to green. And what's Bitcoin doing? Oh, you see, Bitcoin is selling off. So immediately gold went up and silver went up. Liquidity left Bitcoin again. That's the thing. So the money has to come from somewhere, right? So if the money goes from gold, leaves gold, it has to go to Bitcoin. We shall see how that plays out. Okay, so that's gold. Let's look at silver. Silver here. Then we'll go to the individual stocks and then we'll wrap up. So here we have silver. So silver has done its thing. So silver and gold are in the same family. Anytime gold rallies, silver follows. So far, we have gotten this move from silver, right? Silver, this is a trend line from 1980. This yellow trend line, 1980 highs. 1980 highs. So this yellow line is trend line is the mother of all trend lines, right? 1980 highs, 2021 highs, no, 2011 highs, and then boom, breakout, right? And once you break out like that, what did they do? They scored a failed breakout. So what they did was that they brought it down, retrace. So we are retracing to the scene of the crime. We've passed that, and we are trying to hold here, trying to hold this level. So if silver holds, is going to look to reverse, and we shall see what happens in the days and weeks ahead here. So this looks like this silver here. This looks like an inverse head and shoulders for me, right? This is your left shoulder. This could be your right shoulder. This is going to be the head, and then boom, then we take off from there. Or it could be a bear flag. Who knows? Okay. So how am I going to play this? I'm going to play this using GLD. That's the ETF for gold. GLD. Let me go to the GLD is the ETF for gold. So over here, I see gold. So this looks to me like a bear flag. It looks like a bear flag onto proving otherwise, right? So bear flag here. The bear flag is going to be negated when we get a candle that does this, right? A green candle that does this. So for now, is in the balance. If we get a candle like tomorrow's candle, if they say tomorrow's candle, it breaks above this orange lines area. Most importantly, we trade above the moving averages, then it's gone. So here we come and fill this gap. Once we fill this gap, then trust me, we'll get to all-time highs again for gold. And then anything above all-time highs is a cherry on the cake, right? So here, if we go this way, then we negate the bear flag. If the bear flag confirms, we break to the downside, then we are confirming the bear flag. So we just move this one here. So instead of green, it's going to be red. It's going to be red. Boom. Then that way we are going to target it coming here to the 50. So here, somewhere here. And then once it gets here, it can hold. And then boom, take off, right? That kind of thing. So that's why I see here. So it's two options, option A, option B. Wherever they go, you should be able to interpret it and figure out what they're trying to do, right? If we break above this, then the bear flag is null and void, right? If we push, also, you also have to check it, because here, what can happen as well is that you can come somewhere here like this, and then you can put in a head and shoulders as well. So you get something like this. Let's say this is a green candle. So there are a lot of possibilities, right? So as a technical analysis trader, as a technician, what you need to do is that you always need to think 2 steps, 3 steps ahead. Okay, what are they doing here? Are they doing this? Are they doing this? You figure out all the alternatives, all the options, so that once you see it happen, you don't get surprised or shocked, right? So here, this can do something like this, and then do head and shoulders, head, left shoulder, right shoulder, and then from there we have to come down here and then break, bam, we come down. All right, so that could be the option. So 3 options. Okay, those are the 3 options. All right, so let's look at silver. SLV as well. Birds of the same feather confuse their owner. You see that? Same thing. Same thing here, right? This is also a bear flag. So here, this is your flagpole. This is your bear flag. But this, if you look at this, silver is stronger than gold, right? Because silver is trading above the moving averages. If you look at gold is still trading below the moving average. You see the teal blue line where it is? Look at where silver is, right? Okay, so here, this could do this as well. Could do that, and then we are going to go down the bear flag, right? But if we confirm, if you get another candle, if you get a green candle that goes above this $44 level, like this, then it's over. Forget it, it's over, right? That means that the bear flag has been negated, right? So as a technician, you should be able to know when a bear flag is negated, a bull flag is negated, when it's confirmed, all that stuff, right? That's how you can read the charts. So here, all that we see here is money. All these candles are money, right? So you learn how to read the footprints of money. Okay. So if you're not part of our community, make sure that you go to our website and join the free community. So here, this is what you do. You go to our website, Trading Rich. So tradingrich.com here is free community. You can join the free community. And then later on, once you are ready, you can join the paid community as well. So we have a free and paid community. So here, this is where you have to go join the free community. We have lots of resources there, master classes, information that you can use to learn about the market. Okay. All right. So let's go back to the chart. So that's why I see here for silver. Let's now go to, now that we've done silver, gold, stock market stuff, we've checked crypto and see what's happening there. So if crypto is going to go up, then these guys, these bear flags have to confirm on gold and silver. But if you see that this is going up, then Bitcoin might be in trouble. Crypto might be in trouble. But we've seen times when gold is going up and crypto is going up, all of them go up at the same time, right? But we shall see how that plays out. But crypto is struggling because nobody is putting money there. Liquidity is not going there. Liquidity is going to gold and the stock market. Okay. All right. So now let's look at some high probability plays that I'm looking at for the week. There are a couple of them. So if Bitcoin or crypto wakes up from sleep, from this deep sleep that is in right now, then I'm going to be looking at stocks like Circle. So Circle is a stablecoin company. And this stock is ready for a breakout, but it couldn't go last week. So this is called, it had a big red week. And if you look at this, so here, this is consolidation. See all here? This is a consolidation move. So what can happen here is that it's two things. It can either go to the upside or it can go to the downside. Now, right now, it's not like, so here it's just like even, it's draw. Well, go up, come down, go up, come down, go up, come down, right? If we get a candle that's closed, a red candle that closes below this red box, then okay, then the next area is going to be here. We are going to come here, okay? So that's going to depend on what crypto does, like Bitcoin does. So what you can do is that we can do something like this. Do something like this. I'm trying to get this to work here. So we do something like that. And maybe it's some kind of a candle. Let's say it's a red candle, right? We do a red candle and then we do something like a double bottom here, right? Most of I'm targeting here, this can be a triple bottom as well. And then from there, it can take off and go, right? So that's one of the alternatives. Or you could just start breaking out from here. If crypto comes back, you get an engulfing candle engulfing candle, green engulfing candle that breaks up above this box, then it's off to the races, like it's going to go, right? So that's what it's going to be. So right now it's a draw. It's a draw. Everybody's battling, right, for supremacy. It's a draw right now. So let me go back to my chart. So this one I'm looking at. So over here, we've not broken below here. If we can recover and crack above here, then we are going to go. If we fail, then this is going to come here. The next support is going to be here. And then if this fails, then it's going to come all the way here. Then next support is going to be here and then over here as well. Okay, so circle, I'm looking for circle either to play to the downside or to play to the upside. If we break below this 124 level, then I'm going to look to short this to the downside, targeting this one, first profit target, second profit target, and then here, right? If we push above, then I'm going to go long and I'm going to target these upper profit targets, which are the resistance levels. All right, so that's one crypto stuff. Also, another crypto one, which is like a small cap. Again, I'm not, I don't trust small cap stocks. They are prone to collapses, right? They do well one time and then they give up and then they do all sort of crazy stuff. So here, this is a crypto treasury. This company, Crypto Treasury, is a company that uses all its money to buy Bitcoin. And so if Bitcoin price goes up, the stock goes up as well. So this is one of them, and it's looking looking strong, looking to go. So what it did was that on the last week, it bottomed here, it had a gap, it filled the gap, and now it's looking to recover, right? So if it's able to break above this 20 SMA purple line, then it's going to go. We are going to get something like this, like a green candle, and then it's going to go. It's going to take off, right? If it can do that, but it's not done that yet. It's still not out of the woods yet. It's not done that yet. So we shall see how that goes. So this is going to be dependent on if Bitcoin behaves itself and comes back, then we are going to see those things happen to those kinds of stocks. This one too is there. Coin, but I'm going to skip coin. So another one that I'm going to be watching. So this one is going to be, it has earnings coming up. When is it? Earnings coming up for HIMS and HES. Oh, Monday after the close. So I believe HIMS has always respected the 200 SMA. So the 200 SMA is a simple moving average 200. This is on the daily chart. This is the yellow line. So you see that every single time HIMS has come here, what did it do? It bounced. Did that here as well. Some time back, it bounced here. It went up. Bounce here. It went up, right? So every single time it come here, it's bounced, right? So what is it doing now? It's trying to do the same thing here. And it has earnings coming up on Monday. So what I'll do is I'm not going to play the earnings. I'm going to wait when after the earnings, depending on how they perform. If they hold this 200, then I'm going to look to go long. If the earnings is good, we are going to ride it to the upside, right? But if the earnings is bad, we will finally crack below this 200 and we'll trade below it, right? Trade below it, can do like a gap down or something, trade below it. But if it's good, it's going to go up. We are going to get like a green candle. Maybe it's like a gap up green candle that maybe is trading somewhere here, something like that, right? We shall see how that plays out. So HIMS, I'm going to be watching HIMS. And based on what I'm seeing here, I believe that when earnings is announced, HIMS is going to be green because here it has sold off a lot, so it's going to be green. So it just needs to say something good, okay, boom, it's going to go, right? So that's HIMS. Next one that on my radar is Netflix. So Netflix, they reported that they were going to do what's it called? Stock split, right? They were going to do 10-to-1 stock split, meaning that whatever the stock price is on the day of the stock split, you just divide by 10, you are going to get the new share. So if you own one share of Netflix, you are going to get 10. It's going to be split into 10. Okay. And usually, like anytime a company announces stock split, you are going to see the stock run up into the stock split. Then from there, you can now start selling. Okay. So if that happens to Netflix, then what we are going to see is that we are going to see like a move to the upside. So let me change this to, okay, change this to here. So we are seeing, so we have this line here, this trend line here that is holding so far for Netflix. We shall see how that. So you see that every single time Netflix has come, this is the 200 simple moving average. Anytime Netflix has come here, it kissed it, it did not touch it. It broke it and held. It's holding. Here it broke it a bit, like this was 2023, and then it held, right? Here too, it came close to it, it kissed it, but it did not touch it, right? So you have 1, 2, 3, 4, right? 4 time lucky. So now what needs to happen is that we need to regain this. We need to remount this. So I believe we are going to get a push to the upside, and we'll possibly fill these gaps at some point. There's a gap here. We'll possibly fill that gap at some point. So it's not going to be a red candle, green candle, most likely, right? Going to get a green candle. So that, I believe the stock split is going to be on November 17th. So from now to November 17th, you are going to get that run up in this. Because Netflix is a very expensive stock, if you're trading with options, you can get the NFLX, NFLU. Look like an NFL company, NFL franchise. So here you have NFLU, right? This one. So you can get this one as a leveraged ETF to trade Netflix. Just be careful with the bid and ask price for these things, because sometimes they are all over the place. But you can, instead of buying the Netflix, which is going to be super expensive, you can buy this one and trade it. So if you know how to trade, this is for only guys that know how to trade, like day trade, swing trade, that kind of thing, right? So you can use the Netflix chart as your main guide and trade it using this. All right. Another one is Roku. I believe the reported earnings, if I'm not mistaken. Roku reported earnings. It's been a while since I traded Roku. So Roku is like a competitor for what's it called? Netflix, right? But it's nowhere near Netflix. Netflix is far gone, far advanced. Roku, oh, it's not showing me. ROKU. So you have Roku. This was January 29th. Oh, January. Oh, that's the next one. Okay, that means that they've already reported. They reported on the 30th. So they produced like good earnings, and it caused it to go up. So this is due, like this is a big base here. This is a big base here. So I expect this to it's frozen here. Check this out. Yeah. I'll get my this thing to go up again. Just 1 sec. I'm getting my software to reload. All right, so we have Roku here. Go and look at Roku closely here. So this is what we have here for Roku, right? So Roku, I believe that it needs that kind of breakout. It needs to break out. So it needs to break out of this area. It tried to do that. It tried to do that on last week. So you have this 108 level. This is a weekly time frame. If Roku can break above it, then we are going to get that push to the upside, right? We are going to get a breakout. So this year, it has nothing but blue skies. It's going to go, right? So this has been consolidating. So if you look at the monthly, so this rounding bottom. So you have one bottom, that bottom here. So it's rounding bottom here. So it just needs to clear this area, 116 thereabouts. Once we start here, you can go and push. So you have here all this red needs to be pushed. So at least Roku can squeeze in the interim. It can squeeze to as high as 178 once the squeeze starts. Okay, so that's what I'm going to be watching for Roku. So Roku is a long if it triggers. If the long triggers above this area, we are going to look to trade it to the upside. Okay. And for another stock that I'm going to look at in terms of the earnings, post earnings, is going to be also Open. Open has a beautiful chart. If this was not trading earnings, I would have traded this. They traded this, but you have earnings coming up, so I have to wait. Where is Open happening again? Where is it? Open door here on Thursday. So this move can even start before Thursday, right? Because it's already looking to break out. So here, this is your bull flag. It's your flag here, and this is looking to go. So I believe that at some point, either before earnings or after earnings, you can get something like this. Green. That's assuming they beat earnings. If they fail, then we are going to come down. If they fail, we are going to come down. But if they beat, you can get a long green candle to the upside. For AMD is like it's trading all-time highs. I don't think like it's too much. It's gone too high. So maybe here is what I'm looking at. AMD. If there's a pop post earnings, I don't think it's going to go beyond this. AMD is not going to go beyond this. If there's a pop in the earnings, it's not going to go beyond this. Here, this one. It's not going to go beyond this. It's going to come here, and then we shall see. We shall see how it plays out. You could just do some green candle, go here and consolidate, and then boom, comes down. So just bear in mind that it's a gap here that needs to be filled at some point. So if the earnings come in and it's not good, and Wall Street are not happy with it, we are going to get a gap fill here. This is going to fill a gap at some point. So we shall see how that plays out. But I'm going to use this trend line as a guide. If we break above it, fine, it can do that, but it could maybe pop and then drop. So AMD, I expect if it's going to be just maybe small, like small green. If it fails, then boom, it's going to go down. Okay. What else am I looking at? I'm looking at another one that I'm looking at for. Let me see. BA has been struggling. BA sold off a lot. BA sold off in their earnings, and we are coming here to the 200. So the 200 is a critical level, and it's a magical level, right, for most stocks. So that's the mother of all moving averages, the 200. So here, I expect that Boeing might bottom. So you see here, if you look left, bottom here, this bottom here, see this one? Boeing might bottom here. So I'll look to see what happens tomorrow. I like the fact that Friday, even though the market was weak at some point, Boeing held, and we shall. So don't be surprised to see Boeing push up tomorrow. So I'll look to day trade it tomorrow. Like those that are in our day trading room, we'll trade this if it triggers tomorrow. So maybe $200 calls expiring on Friday. You should be able to day trade that, and maybe you could get a move. I don't think it's going to get here, but it could come to this gap fill here. But at least you can get a move from 199 to this area. That's more than enough, 8%. That's more than enough to make money. So BA is a very good one. And then you have MP. MP is reporting earnings. MP is reporting earnings coming up. When is it again? MP here on Thursday. So these stocks rallied because of the China ban on rare earth materials, and they came back down to earth, right? And they are crashing badly. So this thing can go, if it fails to hold this area. Let me go to my chart here. Had a trend line thing. Yeah. So if it fails to hold this area, you see here, this 100 SMA, if it fails to hold it, then it's going to go down, right? Because here we have enough support. This one bottom, this another bottom here, and then we have this here. So it's like if it holds here, then it can reverse. If not, then it's going to break, and then you have a lot of gaps to fill here. So if I'm a betting person, what I would say is that I will lean 60% to the downside and then 40% to the upside. Because once this cracks here, you have these gaps here, gap to fill, gap number 1 and gap number 2, and then here the 200. So that's a possibility. So these are reporting earnings coming up on Thursday. So the contracts are going to be expensive. So we are going to wait for the earnings to be done, and then we can trade them, right? I have a couple more stocks here. So I have Amazon. Amazon produced earnings, and the earnings was good, but so anytime you see something like this is institutional selling, right? They are selling into the pop, into the rally. So what that meant was that even though the earnings was good, everybody was happy, and it popped, it closed red. Why did it close red? Because institutions were selling. Because why? From a technical standpoint, he met this what? This is a 2020. Oh my God, this is a 5-year trend line, guys. Look at that. 5-year trend line. Another mother of all trend lines. 1, 2, and then boom. So anytime that Amazon has come to this trend line, it has crashed badly, right? Here, it came down here. It took a while. Here, boom. Liberation Day, sort of. So that's where we are. So right now we have 1 time, 2 time, 3 time, and 4. So once you touch a trend line, a mother of all trend line multiple times, it's going to take a while for you to break it. It does not just break this like that. So that's why institutions were selling here, because they know that, hey, this stuff is not going to just break out and go. It's going to fail, because this is a mother of all trend line. If they had another candle that broke above this, then fine, we are going to go. So until then, I will look to short Amazon. Okay, so this is the close of Friday. There's the previous highs here. That was September 9th. So I'm going to see if we can get a push to the downside. I'm going to look to short this. My stop loss is here. If price comes and it does this, give me a green candle that closes above this mother of all trend lines, I'll run away and cut the trade off. But if it doesn't, then full steam ahead. We are going down. We are shorting this to the downside, to this area. So here we are going to get, next target is going to be here, like here, then here, and then here. Okay. All right. So that's what I like about this short on Amazon, because it came in contact with a mother of all trend line, which is a hard nut to crack. It's like a brick wall, like a solid brick wall. Okay. All right. So that's the you also have JPM. This JP Morgan. JP Morgan is a bank. It's looking for a break here. JP Morgan, the bank. So here, what I see here is that if we're able to crack above this trend line, and specifically 312, a crack above 312 is going to push us up, and we are going to make new all-time highs. Okay, so at least you can get something to push to this area, and then once we get there, you can think about pushing up from there, right? So that's how I see this. It's not going to be a red candle, it's going to be a green candle, boom, something like that, right? So that's what I'm looking to see here. Yeah, so let me know if you guys have any questions. Let me know. So put in the chat if you learned something from today. Let me know what you learned from today, and let me know if you have any questions, and then I will be happy to answer them. Also, I forgot to talk about the VIX, the almighty VIX. We'll talk about VIX quickly here, and then we'll go to the question if you have any questions. So the VIX is the volatility index that tracks the S&P 500. So anytime the VIX is up, the S&P is down, right? So here we have this. So we have this trend line here. This is the highs, high of this, high of that, high of that. So now we're looking to break it. They couldn't get a job done on Friday. and it pulled back. If we're able to get a volatile candle, a candle that pushes, at least is going to come here to the 200, this yellow line, then we are going to get a sell in the market. So we are going to get that sell. If we start getting this, we are going to get that sell, the one that I showed in the bull flag thing. I'll go back and show you. So here you see SPY. Let me go check out my SPY. Where is it? Yeah, see here. If this fails, if we don't get something like this, then we are going to get something like this, whereby it's going to be a red candle. Red candle to the downside. Then if that happens, then you are going to see the VIX. Take this up. You're going to see the VIX. The VIX is going to be trading up. VIX is going to be green. So it's the opposite. It's going to be green. So I think once it comes here, it's going to bump its head into this. But sometimes it can be crazy and it can go, right? Go up like this and then go. So you can get that one is going to be a green candle. All right, guys. Okay. So let me know if you have any questions. Put your questions in the chat. And I'll be happy to answer your questions. So someone says, what's happening to UNH? So UNH, let me see here. So let's check out UNH. So UNH is pulling back. The last time I checked, it's pulling back. So UNH is pulling back. It's done a remarkable job. It needs to pull back and chill a bit, right? That's what it's doing. So here, so if you're a member of our community, we caught UNH from here, from the bottom here. So we caught it before Warren Buffett and team entered the stock, right? So here, and then Warren Buffett and co announced that they are acquiring a stake in this stock. They bought some shares, and then boom, it's sending up. So here we were able to fill this gap. My target for this was here. So I've sold some of mine, like I've sold majority of mine because I was targeting here anyways, right? This is the place I was targeting because this moved from where? Look at that. We captured 58% move in the equity. So what UNH is doing is that just pulling back. It's pulling back here to the 50. Let's see if it can hold. If it holds, then it's going to push up. If it doesn't, then it's going to come down here to fill this gap. There's a gap here to the 100. And then from there, if it fails, it's going to come all the way down here. But I don't think it's going to come all the way down here, but at least somewhere here, once it fills this gap, it can go. But I'm out majority of my holdings here. I'm just holding just tiny piece, right? But I'm out majority of my holdings because my ultimate target was this gap fill 380, and I got that on the day that they had their earnings. So I just took some out, right? So it's pulling back. It's just pulling back, and I believe that folks are taking profit. It's profit taking. People are taking profit. Like people like me are taking profit. Other people are taking profit because if you got this run from here to here, you have to be paying yourself, right? Then from there, it's going to come back now and try to see if we can break this. This is not done yet. I mean, if you are holding this for a long time, this is going to do well eventually. Once they resolve their issues, this is going to do well and then push up to the upside. So far, so good. It's still trading in the deep value zone. It's still cheap. It's still a good one, but I think it's pulling back. So can it pull all the way back? It could do something like this, guys. It could come all the way here. Like come and fill that gap, put in an investor and shoulders, and then go. right, and then go right. But I mean, for me, I've taken majority of my profits out because this is not, it's like the gap fill I knew was a place where it's going to react. It's going to be a reaction, and then we are getting that reaction now to pull back to the downside. Okay, so I hope this was this helped. Let me know if you have any other questions. Let me know if you have any other questions. So yeah, so if you want to, someone say, will you be watching any Canadian stocks based on upcoming budgets? No, I don't trade Canadian stocks. You know, I unfortunately I just focus on the US markets, right? I just focus on the US markets. But yeah, so once the budget comes out, I'll check it and see. But the US market is 45 times bigger than the Canadian market. So I just focus on the US market. Okay. So let me know if you guys have any questions. Let me know what you learned today from the live stream. What's one thing that you learned from the live stream? Let me know what you learned from it. I will also post my I'm going to show something here. So yeah, so if you want to join our community, make sure you join. And also 50% of the folks that watch the YouTube live and the videos have not subscribed. So please, if you're not subscribed, please subscribe and hit the notification bell so that anytime I go live, you are going to get the notification. And also during the week, I post a lot of educational videos. If you want to learn about technical analysis, you want to be watching those videos because they are going to teach you technical analysis. Because technical analysis is the language of the market. If you're in the market and you don't use technicals, then you are missing out. That's what it is, right? You are missing out on key vital information. So you have to know the fundamentals and you have to know the technicals. So our trading range, what we focus in is that we don't focus on the narratives like news. Yes, news is great, but I don't make my decisions, my investment decisions or trading decisions based on news. No, I make my decisions based on the charts because the news can be fake, right? Or the news can be buy the rumor, sell the news. How would you know? You only know if you understand technicals, right? If you understand technicals, and technicals puts the probability in your favor 80% of the time. So once you get the news, what you just need to do is that if the technicals confirm it, then that's great. And then there goes social media. Social media is all hype. People saying Bitcoin is going to 1 million by the end of the year. People saying it's going to go to 250 by the end of the year. But I've shown you the technicals. Judge for yourself. Does it look like a chart that is going to be 250,000 before the end of the year? Yeah, it could. We still have time. We have 2 months left. It could just rally. But until that mother of all trend line cracks and breaks, forget it. Any person that you know is a crypto person making noise, you tell them, listen, look at this mother of all trend line. Look at it. Until this breaks, you are not making new all-time highs. That's it. So that's why I like technicals. It removes the arguments and ambiguity out of it, and it just puts the thing down. So the data don't lie. The technicals don't lie. Okay. So here you can join our free community if you want to join me, if you want to trade with me live. So I trade with members live every day. Or if you want to get our signals, our trade signals, so on a weekly basis. So if you want to invest in the market and you want us to do I do the job, I do the research, and I give you the alerts. Again, not financial advice, but what I do is I provide you with the information, and then you can trade it on your own because you are going to be clicking the button, not me, right? So here, what does this entail? So over here we have like a swing trading service. So you buy options of a stock and you hold it for a couple of days or weeks or months, whatever it is, and you profit from it. Right. So every week, what I do is I provide members with up to 3 expertly crafted options trade alerts. And then what you need to do is that you just have to follow the instructions and execute on them. So once I take the trade using my money, I alert it as well so that you guys can take it and execute from it as well, right? Because without the then when I sell, I tell you I sell. When I stop out, It's not all trades that are going to be green. Sometimes you have to cut the trade and take what is called professional loss. So as a trader, what we do is that we put a trade plan. The trade plan says, if the stocks does A, B, C, and D, we are going to buy here. If it does this, we are going to sell. If it moves in our favor, we are going to sell here. If it doesn't work out according to plan, we are going to sell here. So we're just executing on the trade plan with no emotions. If it works, it works. If it doesn't work, fine. We take the professional loss. Professional loss is not a loss. Because professional loss is a loss that you predetermined already. You've already psyched your mind that, hey, you know what? I'm entering into this trade. This is my risk. I'm putting in $1,000, but I'm only willing to lose $100. That's it. If it goes down, then at $100, I take a loss. But if it sees the $100, then it becomes like a real loss, right? So yeah, so those are the things. And then we use a strategy, a risk management strategy called Size for Zero. So once you join, you are going to learn about that and you can implement that as well. And yeah, so we have this service here is only $47 USD per month. This is very, very cheap. And then you get guarantees. So we have guarantee, money back guarantee. For any reason you subscribe with that for a whole month and you say you do not make money, you show us the trades, we give you a refund. That's it. $47. And then if you want to do the yearly one, it's $470. You get 2 months off free. Okay, so far we've had a high win rate for this. So if you want to sign up, I'll put the link here to sign up. Here, this one. Sign up here. Put the link to sign up here. So that's the reach alerts. And then the other one is if you are, an options trader or you are a futures trader, you can trade with me live here every day, Monday to Friday. We trade a specific strategy, right? Most traders trade setups. We trade strategy, right? So we trade strategy within the first hour of the market open from 9:30 a.m. to 10:30 a.m. We trade a strategy, and then after 10:30 is setups. That's where you look for double bottoms, all that kind of things, all those chart patterns and stuff. Then you trade those ones. But most of the time, we are done by then. That's just if you want to do additional trading, you can do that. So here, most of the time, our goal is to be done by 10:30 a.m. Eastern. By 10:30 a.m., we are most of the time done. 95%, we are done by 10:30 a.m. Eastern in all our trades. And then if you want to hold some after that time, you can do that. Or you want to take secondary trades, you can do that as well. So here, I give members like a game plan every single day. Before the market opens up pre-market, I give the futures game plan, the options game plan, and then once the opening bell goes and the trade triggers, we all take it together and it's fully guided, right? Once we are taking the trade, I'm giving you lessons about why we are taking the trade, why he's doing this, why he's doing that, where he's going to go and stuff, why you have to pay yourself here, why you have to take profit here. So this is a day trading service where you are going to learn. Because once we get into the bear market is going to be a day trader's paradise, right? A day trader's paradise, or a time where day traders who know what they are doing and have a good strategy are going to be laughing straight to the bank, right? Because there's going to be volatility. And then once the market is selling, you make more money to the downside than when the market is going up. On Wall Street, there's a saying that the bulls take the staircase up and the bears take the elevator down. So it's very, very fast and swift, right? When we come to the market sell-off. So here, if you want to learn, this is the time for you to learn, right? You should not wait until the bear market hits and then now you want to learn. No, now you want to learn in a cool market, in a market that is not crazy, right? Because once we get into the bear market, it's going to be crazy, right? It's going to be very, very volatile. So you want to learn now, adapt to it, so that once we get into the fast market and volatile market, you're already ready. Okay. So here, this is what it is. This one is just $97 a month. I'm trading with you 20 days a week, and you can learn from this. And then here, if you want to do the yearly one, is for $970 USD. Okay, so for new traders, I'll say that invest in your education, right? Invest in your, because education, knowing the stuff is critical. It's not even about money. Once you understand and you have the experience, money is the byproduct of that. But if you don't have any experience and you want to just chase money first, you are doing it wrongly. You are going to lose. You are going to give up, and you're going to say, "Oh, the stock market is a scam. Trading is a scam." No, it's because you do not take your time to learn. Delayed gratification, right? So here you are going to learn the real deal. You are going to learn like futures trading, options trading. We have a lot of futures traders. We have options traders, and members are killing it every single day. Most of the members are green. There are some members who have a green streak for months. Every month green, right? Pulling money from the market every single day. So this is the service for you. I'm going to put it here in the chat. And yeah, let me know if you have any other questions. Then we shall wrap up here. Okay, guys, let me know if you have any questions. Any questions here before I wrap up? So let me know if you guys have any questions. Okay, guys. So if there are no questions, have a good night. Those are part of the trading community, our day trading community. We shall meet tomorrow and trade together, and make sure that we start the month on a high note here. So have a good night. Thanks for joining the live stream today. We shall see you in the next live stream or the next education video. Make sure you share, you subscribe, share this video with your friends and family who are interested in learning about the market, so that they can also learn. And we'll see you in the next video and the next live stream. Have a great week. Take care. Bye-bye. Bye for now.